Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Now, how do you know what currencies are going to do? Isn't this just a big guessing gambling game? Well, I'm probably one of the few people from inside the investment community that says, well, yeah, it can be. You don't know where the markets are going to go. You don't know where the stock market's going to go. You don't know where currencies are going to go. You don't know where bonds are going to go. Unless you have inside information, you do not know where anything is going to go at all. With that being said, the question comes up, why would anyone ever buy a stock? Why would anyone ever buy a mutual fund if you don't know where it's going to go? Well, the reason that I think people still continue to buy stocks and mutual funds, and myself included to an extent, is the fact that throughout time, the U.S. stock market for United States citizens has been a great rate of return. And that's a back test. And I challenge anyone to come up with a better back test for rate of return for that long of a period of time is the buy and hold U.S. stock market. Now, over shorter periods of time, I'm sure there's plenty of back testing out there that has worked, but for a longer term rate of return on that diversified of a portfolio, it's tough to beat the S&P 500. Now, not to start singing the battle hymn of the Republic here, but America has been through the fire before, and the reason that people still continue to go back is because of the strength that our country has and that it has had. Folks, we've been through 2 world wars, we've been through Great Depressions, we've been through Korea, Vietnam, we've been through inflation, we've been through the tech bubble bursting, we've been through Black Monday back in 1987, and we've lived through that. That's the reason why people keep coming back to our stock market, in my humble opinion. Now, how does this relate to the ISE currency options? I think this can be useful for purposes of insurance. You insure your house, you insure your car, you insure your life, you insure your health, you insure your income through disability income insurance, you insure your teeth through dental insurance, you have vision insurance, you have long-term care insurance. What a lot of people fail to add is portfolio insurance. Why do we leave our nest egg without some type of insurance? Now, does that mean that options are the only way with which you can insure your portfolio, that you have to buy put options? Absolutely not. I've done webinars in the past of talking about how you can insure your portfolio by just having a plan. And if buy and hold investing, by all means, it's definitely a plan. I don't have a problem with it. But what I want to show you today are ways with which you may want to consider at least looking into portfolio insurance based upon currency. Why should I care? I live in the U.S. This is the question that I get a lot. Well, let me ask you some of these questions. Do you buy energy-based products? Oil, for example. Do you buy imported cars? And do you pay for the service that exists on imported cars? It's usually more expensive to get service on an imported car than it is on a U.S. car. Do you buy imported technology products? Do you buy imported clothes? You may not think you do, but somewhere along the lines, I bet you do. Do you buy an imported cell phone? Do you drink coffee? Do you buy toys? Do you invest? And if you answered yes to any of those questions, currencies can play a role in anything that you do, not just in the investment portfolio, but in any of these other areas as well. Let's move on. We're going to start by talking about investment hedging. After all, that's what a lot of us are focused on as we go through this. Just a quick review of the ISE currency options. We have AUX, which is for the Aussie dollar, CDD, which is for the Canadian loonie, EUI, which is for the euro, SFC, which is for the Swiss franc. Try saying that 10 times real fast. Of course, everyone's favorite ticker symbol, YUK, for the Japanese yen, and BPX for the British pound. These are available, and you can hedge using these currencies depending on what products you buy or the area with which you invest. Now we're going to start with stocks. And what I want to show you is a correlation to currencies in relation to the stock markets of Europe, Japan, and the United Kingdom. Now, the reason that I chose these, number one, because they are available on the ISE currency options, obviously, but number two, I'm using these because there's readily available ETFs that track these, and they're pretty liquid ETFs that actually track some of these marketplaces. And I'm sure you could do everything in a lot of different currencies and a lot of different stock markets, but Europe, Japan, and the United Kingdom, they're not unknown places. So that's kind of how I came up with these three areas. First off, let's examine Europe. What we're looking at right in here is a comparison chart of the S&P 500 and EZU over the past 2 years. And this is going into approximately May, a little over a month ago, of 2009. Looking at this, the red line is the S&P 500, and the blue line is EZU. You can see how in this case, from July of last year to May of this year, how the S&P has actually has kind of outperformed a little bit. Now, when I say outperformed, let's go back to that last slide. If I were a financial advisor and I was bragging to somebody about a 40% loss, well, that's probably not a good thing, honestly. But I'm doing this to make an educational point here. So when I say outperform, I guess I get to say outperform just to make this point. Why is the S&P not quite as bad as things were in the UK? Well, my question to you is, how did the US dollar perform over that same time frame? Let's look at another chart. Let's compare not only EZU, but the S&P 500 along with EUI, and that is for the euro. What this shows is how in the United States, I'm sorry, I misspoke earlier. I said the British pound. This is designed to show the European stock market versus the S&P 500 and the euro as well. So looking at this, let's go to July of 2008. Looking at the bottom of that chart, you can see in July of 2008 when pretty much all three of these were around the same area percentage-wise over the 2-year time frame. Notice how the dollar, I hate to say the US dollar took off because it's going back to 0%, but it did move. In the currency world, it did actually move quite a bit. So notice from July of that time how the dollar started beating up on the euro in a major way. And the whole world went into a downturn for the stock market for the most part. But what actually held the S&P 500 higher than the European markets? Now, let's do the same thing on the pound. This looks somewhat similar. You can see that neither market is actually a happy place by any means if you're bullish. But what actually holds the S&P above there? Look at this. Notice what happened to the British pound during that time frame. You can see that the US dollar going against the British pound, because this is, remember, this is BPX that we're showing on this as the red line. BPX is what's going significantly higher. That means that the US dollar is strengthening during that time frame. Now, is the US stock market strengthening? Good gosh, no, it's not looking very good. For those of us that were in the market last year, it was not a pretty sight. But look at what the dollar's doing versus the British pound. And this is EWU is the ETF that I'm using in this example, and that's based upon the United Kingdom index, if you will. So we're on a roll right now. We're showing how the US dollar has actually held things up and made the markets not quite as bad. Let's take a look at Japan. Look at this one, the Nikkei or the Japan index, which is EWJ, and the S&P 500. It looks like they're about neck and neck. Wait a minute. If they're neck and neck, but the US dollar versus the yen, you can see that that actually didn't quite tank like the markets did. What's going on? Well, here's the question that I would ask. Did the yen actually hold up the Japanese index during that time?
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.